Hello traders and investors, and welcome back to Explain the Charts. Today, September 23rd, 2025, we're zeroing in on the S&P 500, tracked by the SPY ETF, as the market navigates a critical period of Federal Reserve decisions and shifting sentiment. We'll start by examining the most impactful news stories before dissecting the price action across multiple timeframes. Starting with the breaking news, the S&P 500 index has reportedly snapped a three-day win streak today, September 23rd, with the Nasdaq tumbling as the much-hyped AI frenzy shows signs of fizzling. Federal Reserve Chair Jerome Powell's comments hinting at weakness in the labor market and a challenging situation ahead have introduced a degree of caution. This indicates that after a strong run, profit-taking and uncertainty are now taking hold. Looking at our daily SPY chart, we can see the candles leading up to this recent news. The close on September 22nd at 666.84 marked a peak after 3 consecutive days of gains, confirming the three-day win streak that was just broken today. However, just last week, the S&P 500 was securing record closing highs, fueled by anticipation of Federal Reserve interest rate cuts and progress in U.S.-China trade talks. A 25 basis point rate cut is widely expected from the Fed's ongoing meeting, which concludes tomorrow, September 24th, with some strategists even foreseeing cumulative cuts of up to 100 basis points this year. This accommodative monetary policy is a significant bullish driver, alongside strong consumer spending and positive corporate news from giants like TSMC, Eli Lilly, and Oracle, all contributing to an underlying optimistic sentiment. Now, let's zoom out to the broader picture on the daily chart, spanning from May 2024 to the present. The SPY has been in a clear, sustained uptrend, consistently making higher highs and higher lows. However, we observe significant pullbacks, such as the sharp drop in early April 2025, where price found strong support around the 481 level before resuming its ascent. Another notable correction occurred in August 2024, dipping from around 550 to 510, which subsequently became a foundational support zone. These previous support zones are crucial reference points for understanding potential floor levels during future corrections. Focusing on the more recent period, from March 2025, SPY embarked on a robust rally, climbing from the 560 level to its recent peak of 666.84 on September 22nd. This uptrend was characterized by several strong green candles, often accompanied by above-average volume, indicating strong buying conviction. The consistent upward momentum suggests that despite occasional dips, the market has absorbed selling pressure effectively, driving prices to new highs ahead of today's news. Shifting our view to the one-hour chart, let's examine the SPY's behavior in early September 2025. Between September 3rd and September 11th, we see a period of consolidation, with prices generally ranging between 640 and 653. This sideways movement, marked by smaller candles and mixed sentiment, often precedes a significant move. This consolidation phase likely represented an accumulation period as investors awaited clearer signals regarding the Fed's intentions, ultimately building the base for the strong rally we observed on the daily chart later in September. Now, let's pinpoint the very recent action on the 15-minute chart, specifically from September 18th to the close of September 22nd. On September 18th, SPY saw initial sideways trading, consolidating around 662 to 663 before finding upward momentum. By September 19th, the intraday chart clearly shows consistent buying pressure, pushing the price higher throughout the session, which aligns with the second day of the daily chart's three-day win streak. The culmination of this momentum is evident on September 22nd, where SPY experienced a strong intraday rally, climbing from approximately 661.87 in early trading to reach near its daily high of 667.29 by the afternoon UTC. This sustained upward push on high volume just before today's reported downturn indicates strong confidence that was abruptly curtailed by new economic outlooks and profit-taking today, September 23rd. Given the current market dynamics, let's discuss the reasons to be bullish or bearish. On the bullish side, The widespread expectation of Fed rate cuts in 2025, potentially totaling 100 basis points, provides a strong tailwind for equities. Robust consumer spending, as evidenced by better-than-expected retail sales, suggests economic resilience. Furthermore, specific corporate successes and analyst upgrades, along with Evercore's prediction of the S&P 500 reaching 9,000 by 2026, paint an optimistic long-term picture. A break and sustained hold above the recent high of 666.84 would reinforce a bullish continuation. Conversely, bearish sentiment stems from Fed Chair Powell's cautious tone regarding the labor market and broader economic challenges. The reported fizzling of the AI frenzy suggests a rotation out of high-growth tech stocks, potentially impacting the broader market. Concerns over a sell-the-news reaction to the Fed's decision and the impact of ongoing U.S.-China trade discussions, including potential tariffs, could trigger further downside. Immediate bearish pressure would intensify if SPY breaks below the psychological 660 level, followed by the more significant short-term support around 650. Failure to hold these levels could lead to a retest of the 640 area, which acted as consolidation support earlier in September. To recap, the immediate important price levels to watch for SPY are the recent high of 666.84, which now acts as strong resistance. On the downside, key support levels are 660, then 650, and further down, the 640 region. Breaking above 666.84 with conviction, ideally on increased volume, would signal a potential continuation of the rally. Conversely, a sustained break below 660, especially if accompanied by heavy selling, could open the door for a deeper correction towards 650 or even 640. The likelihood of testing new highs above 666.84 is moderate, perhaps 55%, conditional on a clear dovish signal from the Fed tomorrow and continued positive economic data. The probability of a short-term pullback to 650 is slightly higher, around 65%, given today's news and potential profit-taking, especially if Powell's tone is perceived as less dovish than expected. Keep a close eye on the Fed's dot plot release tomorrow, Chair Powell's press conference, and any new developments in global trade talks, as these will be crucial in shaping market direction. Thank you for joining Explain the Charts, and we'll see you in the next one.